Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So recently one of the brothers have asked me to look at this company that we're going to talk about today. Is really a very interesting company, and when you look at them from the outset you think, what the hell do they sell? But they are really quite profitable business, and I'm going to go through the financials today and of course show you whether it's undervalued or overvalued. But as always, please make sure you do your own research before you invest in any of these companies. So currently I'm trying to compile all the requests that I've had over the last few weeks into kind of like smaller videos. So I'm going to do that inshallah as much as I can. So if you've got any specific stocks that you want me to look at, just to kind of give you my opinion on what I think and just give you some of the background, the financials, the details and so on, please of course put that on the comment section and I will try it at my best inshallah. As always, we'd love to have you on board when it comes to the Discord. So if you can join us at the Patreon account, where you will be paying about 15p per day and you get access to all the buys and sells. You can see my family portfolio, the dividend tracker, the dividend calendar spreadsheet. You got the stock watch list, you got private Discord like I said, and you also have the Sharia compliant investing ebook, as well as a 5-pager that I put together recently just to kind of show you why I love dividends paying companies and the reasons why we should invest in this type of businesses and so on. So if you're interested in any of that thing, okay, just basically pay that for whatever, £5 or whatever it is, and that will cost you about 15p per day, and hopefully you'll get something out of it inshallah. And there are community of brothers and sisters who are actually sharing very good practices, so that hopefully will help you as well. Now, talking about the company today, the company we're going to talk about today is Parker Hannifin Corporation. This is one of the oldest companies out there, and when you from the outset, like I said, sometimes you might not even understand what the heck the company does, but they actually manufacture and sell motion control technologies and systems of various mobile industrial aerospace market worldwide. There are two main segments to their business. So they've got diversified industrials and then they've got aerospaces. Now, these are the type of equipment they sell. So if you go to products, you will see aerospace systems and technologies, air preparation, for example, bioprocessing. They've got cylinders, actuators, you've got filters, all those little parts that go into the airplanes and so on. So gas generators, hose and piping and tubing, motors, drivers, controllers. So they do all those basically smaller technologies that go into all of these devices, and they have been around for a very, very long time. So yeah, so basically this is the company that we're going to talk about today. Just going back to the top and just check year to date is up to about 10%. And it's interesting to see Quant is actually saying it's a strong buy, Wall Street is a buy, and Seeking Alpha, basically analysts are saying it's actually a buy. So we will look at that in a second. But first we're going to look at the revenue side of things. Okay, so a couple of things I want to focus on first is the going to a straight income sheet. So as you can see here, total revenue from 2014 was about $13 billion to right now about almost $20 billion. So that's a nice growth. Now they're spending about $12 billion of that to basically, of course, to the cost of that revenue basically, and they're making about $7 billion from that. Now let's see how much, after they paid all these taxes and so on, how much of that becomes in net income, and that's about $2.7 billion of the 7, which is not bad at all. Now looking at a couple of more things. Earnings per share has been growing since 2014 every single year nicely, apart from 2020 when the COVID happened. We have a bit of a drop. Then since then it's actually gone up quite a bit nicely. In fact, it's actually done really well from $10 billion, from 10.8 per share. This is the earnings per share, by the way. Okay, $10.08 to right now 24.25 basically in the next 12 months, which is really, really good. And look at this free cash flow per share, which is absolutely outstanding. This company reminds me of Cummins. Cummins, when you look at that company, you think, what the hell do they sell? Okay, they sell engines, old engines, whatever, but they are very well diversified. They've been around for quite some time. It's a business that are really well run. That's why I love the basically industrial sector. It's full of amazing companies. Look at this company. That growth is absolutely wonderful to see. Now let's have a look at the financials for this business, and then we'll take it from there inshallah. Now we've already seen the sector, so industrial machinery and supplies components. The theme basically here for this company is consistently pays annual increase in dividend for well over 60 years. So another dividend king here. Okay, $508 per share right now, EPS about $21, 65 billion market cap, narrow economic beta is slightly too high right now. PE 23, let's call it about 24. The 5-year average is about 18, so it slightly seems a bit more expensive, but forward PE is about 20, so it is coming down, which is quite nice to see. The sector is about 18.5, okay, right now, and the S&P 500 is about 29, 28 right now. The price to free cash flow is about 22, which is okay. And now looking at dividend side of things, so we are getting about basically 1.1 percent of dividend yield, and that's about $6 for every share of this company that you own. Payout ratio very, very low, 24. Latest increase was 10%, and the last 5 years they grew that dividend up basically 15%, which is really, really nice. 67 years of increase in it, and dividend safety of 94%. This is absolutely amazing. They've got $3 billion of free cash flow right now, free cash flow yield of over 4.5%, which is really good, and free cash flow margin of 15%. Excellent business so far from this side, from free cash flow, from dividend side of things are looking good. Profit margin about 14%, which is really good. Operating margins over 19%. Return on equity almost 26%. And return on invested capital 17%. Again, really, really solid business. A very well run business. Okay, the last 10 years the company returned about 16%, and when it comes to revenue side of it, about 6.5% over the last 5 years on average. Now we're looking at the EPS compound annual growth rate over the last 5 years is about 11%, and the current ratio is just below 1. So because the fact that they've got excellent free cash flow, I wouldn't worry too much about that. Now, in terms of growth estimate for the next year, we're looking about 6.5% for the next year. But then every year after that, they're expecting 10%. So every single year, the earnings per share will grow about 10% every single year. Now, if we'll go back here and just look at what Seeking Alpha is saying in terms of the estimates moving forward. So this year they're expecting about 15%, which is quite nice. So that's the 19 analysts looking at this, and then 21, and then 10. So again, 6%, 10%. So year over year growth, that's not bad at all. Even the next couple of years is also good. Now, when it comes to revenue side of it, it's quite hard to grow this type of business more than 5 to 7%. So 4%, 4%, 5%, 6%, 8%, which is quite fine, which is absolutely fine. I wouldn't worry too much about it. So yeah, that seems really good in terms of that. Now, going back here, as you can see, the price right now is $508 per share. According to Morningstar, they're expecting the price to be $430, $31. So that's about 17% premium right now. According to Simply Wall Street, it's $675. Okay, simply saying 24%, 25% undervalued at the moment, which is quite interesting, the contrast between the two of them, because both of them they use the discounted cash flow models, but they actually, of course, factor different things. So probably that's why. So one is very bullish on the company, the other one is very bearish. If you can see here, target price for the next 12 months when it comes to tip rank 621. That's about 23% upside from where we are. More or less, these three kind of agree, to be honest. So I need a strong buy from them. Average price when it comes to from these guys as well is also 601. 19% upside from where we are. It's a buy, and as you can see here from Quant, is actually a basically strong buy from them, which is quite interesting. So yeah, so almost basically 5%, 5 ratings. I think is out of 5, isn't it? Now moving on, before I actually move on from this side, like right now, the fact that it's actually quite expensive when it comes to Morningstar saying it's quite expensive, and the rest of them are saying it's a kind of, I would actually take basically on the average out, and then make sure you've got your list of 5 to 10% margin of safety, because even though they're saying 23%, I would actually add a little bit more and then see if the stock basically comes back down to that level. If it is already on that level, maybe just buy a small little part, just like a little bit of fractional shares here and there wherever you can. In terms of business side of things, in Sharia compliance side of things, you can see almost 100% when it comes to the business side of things. Interest bearing debt about 16%, and interest bearing securities basically is about less than 1%. And they have been buying back their own shares, which is quite nice. So they actually diluted it in 2021, but just a little bit, and then bought it back again for the basically for the basically next 2 years, which is quite nice. So nothing to worry about. Really solid business. I like the business model. Like I said to you at the beginning, I love the industrial sector. I love the fact that no one talks about this company. But when you see this type of margins here, and when you see the dividends and the fact that the free cash flow is absolutely excellent, and they have a grown revenue over the last whatever years, it's really very interesting. I'm definitely interested in this company. I'm gonna keep an eye on it in the next few months and see where it heads, inshallah. Anyway, that's what I wanted to share with you guys. If you have not liked the video or have not subscribed to the channel, please do it. And also join us in the Patreon account when you get access to all of the things that I've mentioned at the beginning of the video. I genuinely appreciate every single one of you out there. Have a wonderful day. Assalamu Alaikum.